Hi, folks. This is Lee with the Market Sense for the week of December 3rd, 2019. Charts in this presentation are brought to us by Gettess and come from their Trade Navigator software. And this is a weekly bond market chart. And we've had a sort of an unusual situation here. Last week was a fairly small inside week, and those are normally prelude to a breakout in one direction or the other, sometimes both directions, but a breakout nonetheless. This is a little unusual because it's almost an artificial bar, right? It's a holiday week shortened, and it's I'm not sure I should trust the breakout, but it's already broke out to both sides. We were looking down here in the 157 area, down at the lower moving average. They didn't quite get there, and they seem to be breaking above the 160 area now, or at least poked above it. I'm actually not too excited about the breakouts here. What I think is you kind of have a big range between roughly 155 here and 164 up here. And I think we're kind of sideways. I don't know that you can expect a real strong directional move out of this little inside bar. I think sideways is more likely. And it wouldn't even surprise me if this comes back inside the two moving averages of the highs and lows here, the red bars. It wouldn't surprise me if we just kind of tread sideways there. Now, there are things that could impact them, notably the monthly employment report on Friday. But until then, I'm just not sure you can believe any directional bias here. I kind of think sideways is the greatest likelihood, so I'm kind of not real interested in doing much. Stocks have a brand new situation here. They were higher early Sunday night, Monday morning. They missed this resistance, or, I hate to call it resistance, the upside target, 3160. They missed it by a couple ticks. 3158 is the high, and they've broken down through, well, as you can see, just about everything. Now I'm going to get into that in a minute, but you would kind of have expected them to hold in the 3094 area. That would be that lower moving average there, right in there. But they've gone far too much through that, 25 points through that. Certainly can't say that that's holding. And so the likely scenario here is we've got that middle Keltner channel, which is all the way down at 3013. And then the highs back here, all of these highs back here begin around 3030. So that, looking at this, would be the normal target for where you would expect this to go. But we do have both the employment report due out Friday, as well as a Chinese PMI report that'll be out Tuesday night, Wednesday morning, kind of. I'm not normally aware of those, but I am of this one, so I'm interested to see if it has something to do with it. So, they could get jolted back either way once that goes. I just like to show you something. When you got the breakdown like this, and again, I say, well, now that they've broken this far, you'd expect them to continue at least down to 3030 and maybe the mid-Keltner. I'm going to show you a reason why that might not be the case, or at least why the low came in Tuesday here. This is a monthly chart, and after the November bar closed solidly above everything, that would leave the upper moving average as the potential support for the next week. Now that is 3078, and the projected low is 3066, and the low has come in right in there around 69 or 70. So I think this monthly chart gives you a good indication of why that market may have stopped where it did instead of considering lower like the weekly chart looks like it should. And this is exactly how I think analysis works. From a fractal nature, you pull these charts together, and the bigger time periods tend to carry more weight. If something doesn't make sense on the time frame you're looking at, chances are a higher time period will give you a much different perspective. So as we see here, this doesn't look too bad at all. Now, that doesn't mean that these reports that we're looking at can't drive these suckers down. I mean, obviously, this has been in a pretty good uptrend. It could run out of steam and drop back down. But at this point, the trend is still up on this chart. So until we get a breakdown from one of those reports, helps to keep that in mind. So that's what we've got for you today. I hope you can find something profitable